The Australian dollar is certainly one of the more interesting G10 currency stories of the year, as RBA and currency analysts fight over what is fair value for the Aussie currency. Well, my next guest, Chief Economist at AMP Capital, Shane Oliver, is going to be giving us the October rundown. Shane Oliver, thank you very much for joining us today. Much appreciate your time.
Thank you.
You're welcome. Okay, so firstly, can you walk us through Aussie dollar trading patterns this month?
Well, basically, the Australian dollar fell quite heavily into the early part of October, and that was a continuation of a fall we saw in September. So it fell about 6-7% from the levels around 94 cents down to around just above 86 US cents. Lately, though, the rest of the month, it's actually had a bit of a bounce back. It's sort of come up from those sort of mid-86 sort of cents level, getting up to around 88 US cents. So it's had a bit of a recovery after a sharp fall.
Now, earlier this week, we did see a drop ahead of the Fed meeting. With global market fears receding now somewhat, is Fed activity going to remain a key driver for the Australian currency?
I think there's no doubt that the Fed has had a huge impact on the value of the Australian dollar. If you put things in context, the Aussie dollar ran up very hard through the mining boom, the commodity boom years of last decade, got to a high of 110 US cents about 4 years ago, and then it's come off a little bit, but maybe not as much as one might have thought, because the Fed is pumping out all this cash. And so that's kept the US dollar a bit lower than it would otherwise have been the case, the Aussie dollar a bit higher. Now you're seeing the Fed end its quantitative easing program, and that's taking some of the pressure off the Australian dollar. And I think that will now allow a continued downtrend in the Aussie dollar through time.
How then does Aussie dollar performance line up with the overall economic picture that we're seeing in Australia and some of the data patterns coming through?
Well, I guess in a big picture sense, it's sort of okay. When the boom was on from 2001 to 2011, the Aussie dollar rose from a level of about 48 US cents to 110 US cents as commodity prices surged. And of course, commodities are the main exports coming out of Australia. Since then, the Aussie dollar has come down. So as commodity prices have come down, the iron ore price, coal, they've all come down. So that makes sense. What I guess has surprised many is the extent to which the Australian dollar has remained relatively resilient. It hasn't fallen as much. For example, the iron ore price has fallen from 180 US dollars a tonne to about 80 US dollars a tonne. The Australian dollar hasn't had nearly as much a fall as that. So it's come down directionally right, but surprised a little bit on the upside.
Now, coming up, we've got a pretty chock-a-block, as it were, data week. We've got the RBA, we've got those retail sales, that trade balance, unemployment. Which of these for you could be the market mover?
Next week, or the week ahead, is going to be a difficult choice to work out which one is the market mover. I'd probably put my money on the employment stats. Lately, they've been somewhat unreliable in Australia. The ABS has found that their statistical adjustment hasn't worked like it normally does, so they've had to make a workaround around that. So there's a bit of uncertainty about that, but I think the jobs figures will probably be the ones to watch, particularly to see whether the trend in the unemployment rate remains up or whether it starts to top out. And that will obviously have an impact on how the Reserve Bank sees things going forward.
Shane, thank you so much today for your comments.
My pleasure. Thank you.
Well, that was Shane Oliver's thoughts on the Australian dollar, but what do you think? Feel free to find Dukascopy TV on Twitter, and you can write us a message there and let us know your thoughts. From me, though, it's goodbye for now.